And there's this growing debate now over what the Fed is going to do in a couple of weeks. How do you see the landscape here relative to what you've seen most recently?
Yeah, I would say today you had a Goldilocks environment. Better growth, lower inflation, as evidenced by the retail sales, University of Michigan. There was a bunch of other data that came out. But let's remember, a lot of that's really sensitive to gas prices, especially on the inflation side of this. I do think that takes 100 basis points off the table for July. We could still have 75 in September, and then later in the year, who knows? But our view is that the data has to get worse before things get better in the market. Most specifically, you have to have the Fed have an opportunity to pivot in some way. It doesn't have to be dramatic. So we still think this is a rally, a strength to sell into, and that we're still in a downtrend. And ultimately, you'll get an opportunity at lower levels to kind of reload your gun.
What a couple of days, Jason Snipe, for this Fed talk and tea leaf reading. Bostic had this bombshell, yeah, everything's on the table. Then all of a sudden, God, I felt like almost every Wall Street bank came out and said, yeah, we see 100 basis points. I talked to some people at Overtime yesterday, money managers. Yeah, we see 100 basis points. Waller kind of talked people off the ledge on that. Bullard today, over the next 18 months, inflation could go back to 2% if the Fed plays its cards correctly. He's skeptical that we fall into a recession. He's more in the 75 basis point camp. Where are you?
Yeah, Scott. So I think obviously the softness in the rhetoric is obviously helpful to the markets. I think as we looked at really hot PPI numbers, hot CPI numbers, and now retail sales this morning, which was a beat. And I think if you remove auto sales and gas, I mean, it was a 60 basis points beat there. So I think that was a catalyst for some of the strength that we have today. For me, when I'm thinking about monetary policy going forward and thinking about what the Fed will decide to do in the next 2 weeks, I think they do move 75 basis points. And I think they'll do 75 basis points in September. And I think that's when they'll pause potentially. We'll see how the market unfolds, throughout the rest of the summer. But as we talked about earlier in the week, looking at commodity prices starting to roll over some, but I think shelter costs is a really big one for me. Looking at housing is a major one for me. So let's see how those numbers start to look over the next couple of quarters, and then I think that will play really heavy into what the Fed decides to do.
All right, Brenda, I mean, this was in many ways, as I've said on Twitter, this was a Farmer Jim number, right? He is the one who has been telling us, you guys are getting it wrong. You're too negative. The consumer is still strong. He doesn't see a recession like so many others do. And again, we've been so, falling into this belief that we're going to have a recession imminently. And maybe that's premature. How do you see what the market's going to do from here?
Yeah, I think certainly this week we've gotten a lot of data points suggesting that the consumer is healthy. And it started with a lot of the bank earnings and just, notes, especially with JP Morgan, saying even the lower income consumer is still consuming and spending, and consumers are taking on a little bit more credit card debt. I think that's okay right here and now because their balance sheets are still so healthy. But I think it's been so easy to get mired in the negative environment, particularly with the inflation numbers that we've seen, and assume that the consumer is really hurting and not able to spend. But then we've seen this week they are still spending, and I think that's really important for the economy because in the U.S. the consumer is just such a gigantic driver of GDP growth. So I think when we look at this environment, I won't say I'm as bullish as Farmer Jim, but I will say that I feel like it's easy to get too mired in the negativity and not really recognize that beneath the surface, things are actually still really healthy. So certainly, could they degrade from here? Absolutely. But here and now, things are still quite healthy. And so I think that bodes well, both for current trends and for corporate earnings here. Of course, we're going to hear more over the coming weeks, and that should give us more insight into what's actually happening and what companies see coming down the pike.